Hey friends, in the video today, I want to talk about the past, present, and future of dividend stock investing. I want to talk about it from my own personal perspective, but also for dividend stock investors in general. But first, a fun photo. As you can see on the screen, this is me in my past. Check it out. I have the GoDaddy t-shirt, I have the old school TV, and I even have some Beanie Babies there on the TV. How awesome. Hey, come to think of it, I'm in the present now and I'm looking towards my future. Honestly, I still like those things. And I like Squishmallows these days as well. So some things I guess never change. But in all seriousness, let's talk about it. As you can see on the screen in front of you right now, this is the past, present, and future for dividend stock investors in general. First in the video, in this first segment, I want to talk about the investing journey. And step 0, typically for dividend investors, is kind of starting with a somewhat maybe painful past or stressful past with not much trajectory for future growth. I kind of break up life into the past, present, and future. And a lot of investors, when they start out, they're really stuck in the past because they buy stuff and they have bills. They have to work. They have to use money from work to pay those bills, and the cycle just keeps repeating, and it kind of keeps the investor stuck in a past mindset, which is not really healthy because they're not even looking towards the present or certainly not the future because those bills keep stacking up. The expenses are in the past, they must be paid, and the cycle continues. Now, of course, a day comes when the investor realizes, hey, I want to be an investor. I want to invest in myself, in my future, in dividend stocks. I want to make it past the past and into the present, into the future. And it's important to realize we have all made, myself included, financial decisions in the past that we wish we didn't make. And it's okay to forget about past mistakes and focus on the future. So that's really step 0 for the trajectory of a lot of dividend stock investors. We've all been there, myself included, but we look towards the future. We start looking towards the present and the future and how we can improve using dividend stocks as a tool. And as you can see on the screen in front of you, now comes step 1. And so in step 1 of the journey, usually what happens is we start using the present to build a bright future. The past, we just cross it out. We try to forget the past. We try to live more in the present. We don't want to live in the past anymore because we need to have bills paid off in real time. And more than that, we need to save some money. And so we're working in the present. We're using some money from work to pay bills. And we can cover all of our bills with just some of the paycheck. And the rest of the money from the work, it's going into dividend-paying stocks. And then that repeats. And I highlight the present because the investor is just starting out here, just starting out to realize like, hey, I don't have to live in the past anymore. I can live in the present. And I can put these dividend stocks in the future column. Because dividend-paying stocks, in my opinion, they sit in the future. They create the future. The stocks have to sit in the future because the cash flow keeps getting paid in the future. It's always being paid and it's always in the future with high quality dividend stocks. And it gets our mindset from a mindset of the past towards the present and future. The journey begins. And in this step of the journey, step 1, the investor really becomes totally focused on optimizing the present while starting to create a future thanks to the beauty of high-quality dividend stocks and ETFs as well. And don't worry, later in the video, I'm going to talk about a few stocks and ETFs that I'm looking at, that I'm buying right now in my personal portfolio. But I want to start with the basics first. So as you can see on the screen in front of you right now, we get from step 1 now to step 2. So in step 2, the investor realizes like, hey, I'm doing something pretty good here with this dividend investing. And more than anything, the investor becomes somewhat obsessed with the future. I kind of feel I'm in this step, if not in the next step, but I'm so obsessed with the future these days because the future is so bright. The past, it's kind of a distant past. It's crossed out. We don't really even think about that. In the present, the investor starts working harder for more money. The investor starts budgeting harder to save more money for dividend stocks, high quality stocks, and ETFs. And some of the money, it's still used to pay bills, but the investor keeps the expenses low. And lots of money is being used to pay for the future. And what's happening is in the future, that bucket of stocks is getting huge. The future is drawing closer. It's becoming more of a reality. Elements of the future are starting to be incorporated into life. The investor is almost living in the future, and you're obsessing over it so much that you can feel it. What's so great about step 2 is when the investor arrives at this step, you don't really even care so much about what your life is like in the present. You don't care about delayed gratification, about sacrifices. It just doesn't matter anymore. You almost forget about the present because the promise of the future, it's just so bright. And you start thinking about life in a different way. This is really when the investor starts morphing from, hey, I'm in kind of fight or flight. I'm just in step 0, for example, where I got some bills, I got to pay them, I got to keep that cycle or the rat race, if you will, going. But now in step 2, the investor really starts thinking, hey, what could my life be? Yeah, these dividend stocks are great. I'm placing these dividend stocks in the future column. They're creating money in the future. I'm becoming obsessed with the future because I can see a future where all of my dividends pay for everything. But what is my life about? How does my life morph? How does my life look in the future? It becomes a complete mindset shift at this point in the cycle because the investor starts realizing, hey, life can be so much more. Dividend stocks, because of dividend stocks, life can be so much more. But as you can see on the next screen, this is kind of the evolution of the dividend investor. Now going to step 3. So step 3, what's so interesting about step 3, and I'm getting kind of close to this step, I can feel it. Elements of this step are definitely incorporating into my life. I highlight here in yellow the future because you're kind of living off of dividend income or partially living off of it. And those dividend stocks that are in the future, they're paying for your present. You have more flexibility to live your dreams. And you start realizing like the dividend stocks, they still sit in the future because they're creating the cash flow that funds your dreams. But your vision now, it can just keep evolving because dividends, they make anything possible. And your future becomes a blank canvas. Like maybe some of those elements of your future that you always dreamed of, you realize those dreams. And now you have to come up with new goals for your future. And so what's great about dividend stocks is they fuel complete financial freedom or partial financial freedom where the investor can go from fight or flight to living in the future, to dreaming, to thinking big. But once you're kind of in step 3 and you're living in that dream state from dividend stocks, the future has to keep evolving. It's important to set new goals, new milestones, new projects to focus on in life because none of us want to stay stagnant. And maybe there's no need anymore for working a 9-to-5 job to kind of grind for that money to invest for dividend stocks. Maybe you're more in a balanced state, but you have to kind of keep thinking in step 3, keep dreaming, keep thinking really big about what your future can be. And really, that's what dividend stock investing is all about in a nutshell. This is a tool. It's just a financial tool. Money is not everything in life. This is a tool to live your dreams. And it's a tool that I'm using in my personal life to go from fight or flight to just kind of keeping the lights on to morphing into having some hope to morphing in terms of obsessing over the future and really enjoying the grind because you're looking at the future to morphing into living the future of your dreams and then dreaming up new dreams because the future is so bright. This is why I love investing in dividend stocks. And so that's segment 1 of the video, past, present, or future, but I have some more segments about past, present, and future as well. By the way, if you enjoy the video so far, please click the like button. And also, just a quick note, I'm wearing my t-shirt here from Blossom Social. Check it out. I'm going to include in the pinned link below. I am an affiliate of Blossom Social, so if you click my link and sign up, I will be compensated. I also recently invested a small amount of money in Blossom Social. This is the future. Blossom Social is the future community for dividend stock investors, ETF investors, and for investors in general. I'm over there all the time. I am talking to, meeting investors from all over the world. It is a great platform co-founded by my friend Brandon Beavis, who is an awesome YouTuber in Canada. He's my favorite Canadian investor. And this is where I'm going to be this weekend. So if you want to connect with me on social media, Blossom Social, it's free to sign up. In terms of full disclosure, my link is my affiliate link. I'm compensated for the signups, but it's free to use the platform. I love the platform. I'm there all the time. Check it out. But anyway, let's keep going. As you can see on the screen in front of you right now. So segment 2 of the video, I want to talk about the past, present, and future of just my journey selecting dividend stocks, because some things have really changed. Things have changed over time. So in the past, and when I talk about the past, I'm going to talk about just my past. And some of you have seen this evolution over the years here on YouTube. But in the past, I was all about core stocks, household brand names, obvious stock picks, dividend growth stocks, and sin stocks, of course. In the distant past, I made a bunch of expensive learning lessons, but they were lessons. I was being educated through trial and error in things like penny stocks, day trading, speculative stocks, speculative investments. This was all before I even started here recording videos on YouTube. But it's important to remember, hey, distant past, that's okay. I learned a lot of lessons from that. And in my more recent past, you guys have all seen that in my YouTube videos. You've lived it. It's been the core stocks, household brand names, obvious stock picks. And let me tell you, the reason a lot of those stocks were in my past as a dividend stock investor, and I still own them. I buy, I hold, I rarely sell. I have to sell sometimes for certain reasons, but I never plan to sell. The reason they're in the past is I kind of look at investing as pre-pandemic and now post-pandemic. In the past was pre-pandemic. Back in those days, investing was a little bit of a different game. And in that era, I could just buy these stocks at any given time, and it was pretty easy. The game was a little bit easier in the past, and I'm thankful that I started in creating my future in the past. But let's talk about the present. What am I doing now as a dividend investor? As you can see on the screen in front of you right now, what I'm really focused on these days in the present is ETFs and diversification. You all know that SCHD is a huge goal of mine this year, and it's going to become eventually one of the largest positions in my portfolio, if not the largest. I'm focused on higher yield, but slower forward dividend growth. It's great that treasuries are down, yields are up. We're in kind of a slower growth environment right now, and it's kind of a reflection of the treasuries. It's also being reflected in the stock market that my goals, they're working for me because I'm closer to the future, but they're also just working better because that's the world we live in right now, where high quality stocks like PepsiCo right now are growing a little bit slower, but they're having a higher starting yield. So it's interesting how the world has kind of morphed, but it also kind of meets my strategy where I need to be personally right now. So it worked out really well in my personal situation. But as you can see on the screen in front of you right now, I want to keep going. And so I'm focused on value stocks that are mispriced. I'll get to some of those in a minute. And I'm focused on cash reserves for the unexpected. Kind of a consideration for me in my present is just more cash flow now versus waiting for yield on cost. Now, that's where I am with the stocks I'm selecting in my present. When I start looking towards my future, which is not so far from now, what stocks am I going to be buying in my future? And I'm already starting to do this a little bit now with Alphabet stock, for example. But I'm really looking at tech stocks, AI stocks that do pay dividends, that do anticipate growing their dividends like Alphabet. Because our world is evolving and our future is very tech and AI focused. And so I want my portfolio also to have a reflection of that in the future. And so I just put a note here, a helpful exercise. How would you describe your investing philosophy evolving over time? It's okay to evolve. We're all evolving. The whole point of dividend stock investing, as I showed in segment 1, is so we can all evolve from being in that endless cycle of the rat race to living a life where we can dream up our future and focus on any kind of projects we may want. And so, it's okay also, just as our selves evolve because of dividend stocks, for our dividend stock selection to evolve over time. But this is really how I see my journey evolving in dividend stocks. But of course, over time, I still incorporate elements of my past in my present strategy today. And honestly, I'm drawing some elements of the future as well into my present strategy. But I have one more segment that I want to share with all of you in the video today. If you enjoy the video so far, please don't forget to subscribe. It really means the world to me. It's one of the best things you can do to support my channel here on YouTube. I truly appreciate all of you. I just want to talk about stock analysis. How has it changed? You already know how I'm kind of looking at life, past, present, future. You know how I'm looking at just my own stock selection, past, present, or future. But analyzing stocks, how am I looking at it a little differently, past, present, or future? Well, check it out. Check it out. I have a lot to say on this slide. And so what I want to start with, past, present, and future, and again, I kind of break it up Past is before the pandemic and kind of in the pandemic. Present is post-pandemic. Future is the future. And so the first overriding thing I want to say that I've seen as a dividend stock investor over all these years is the market will overreact. It will always overreact. I've seen this in the past. I've seen it in the present. I believe it will exist in the future. It will overreact to good news. Stocks will get overvalued. It will overreact to bad news. Stocks will get undervalued. For me, always, I want to take advantage of buying opportunities in great quality companies that pay high quality dividends. But that's kind of the overriding thing. But what am I seeing as a stock analyst, past, present, or future? This kind of builds on the last slide. Well, in the past, we lived in times of declining interest rates. Rates were just declining basically from the early 80s through 22. And we lived in times of relative predictability. And the past performance, it could be used to predict somewhat the future. And it was kind of easy to pick stocks. So you saw me in the past, even during times of this YouTube channel. Maybe some of you have been here since 2018 when I was doing a lot of videos. Put in the comments below. I always enjoy hearing from the OGs, but I also enjoy hearing from the new subscribers as well. So let me know, when did you start tuning into PPCE? And I am so grateful for all of you. But some of you know, back in the past, yeah, I always bought the stocks, or I tried to at least, when they were on sale. But it was kind of easy back then, honestly. Looking in retrospect, it was a different game. It was a different era. It was all about the core stocks and, yeah, a lot of sin stocks as well. But it was easy to buy core stocks because they were growing so predictably. Why were they growing so predictably? We were in a period where rates were just declining over time. And it's a very vibrant and growth-oriented cycle in our world's history. But in the present, post-pandemic, things have changed a little bit. It's not so predictable. It's not as easy, but that's okay. Because as you can see on the screen, one thing I want to point out is Treasury yields are higher now. Treasury yields are higher because the interest rates are higher. And interest rates being higher are stifling growth in certain industries somewhat. And so we're just in a different era where maybe growth isn't quite as high in certain industries, but we're still seeing the market volatility. We're still seeing stocks, buying opportunities. I look at them all the time. One thing I would say is it's more difficult to run a business in this environment because of the higher rates. It's more difficult to run a business because political risks have emerged. Tech AI disruptions are very present, and the AI is innovating at a pace that is unbelievable. And so I would say selecting individual stocks, it can pose a little more risk. It's still possible, but you've seen it. I'm morphing more towards ETFs these days. That's why I do want to make SCHD one of my largest positions for diversification. But still, what are some stocks I'm buying in my present right now because I believe they're mispriced? I'm still playing the game like I did in the past, but the game is a little different. It's a little more difficult. But I'm buying Pfizer. Talked about it in some recent videos. I'll try to link to my recent videos in the pinned comment below that discuss these different positions. But Pfizer, hey, there's a starting yield in the mid 7% range. The PE forward basis now is in the 7s. But yeah, there's risks. Possible litigation, possible government pushback on them. Chevron, the yield now is in the low 4% range, thereabout. I've been wanting to add to this one forever, but what's the risk right now? Well, the oil price has tanked. PepsiCo, I love this one. It's one of my core stocks, evergreen stocks that I used to buy. It would just go up into the right each year. Well, now it's not. It's gone down quite a bit. And the starting yield is in the low 4% range. The forward PE is kind of around 16, I believe, somewhere in that range. And what's the risk with it right now? Well, there's changing consumer habits. Consumers may be purchasing fewer of these salty snack foods. And why are they doing that? Well, one, they just don't even have the money anymore to afford these luxuries. But two, weight loss drugs are affecting the consumer purchase behavior. So there's risks. This is a different game. It's a little different game than it was in the past. I would say when I buy these stocks, they're not just mispriced, but they're kind of mispriced, but there's also priced that way because there is risk, but I believe they've corrected further than the risk would warrant. But still, it's a little different game in the present and being an analyst in the present than it was in the past. In the past, the bar was just a little lower. It's easier to be an analyst. But now let's look at Google or Alphabet. trading right now with a very low dividend yield, but they just did their first dividend increase. And the PE now, it's somewhere around like the 16s on a forward basis, which is really low for this company that is growing so quickly. But what's the risk? Possible decline of search. We just saw some news about Apple, where they're seeing fewer Google searches on Safari, and also they're considering putting AI there in place of Google search. There's a possible company breakup that is being looked at by the government. And so that's the risk. And Google, honestly, it kind of bridges the gap of the present and future because it's a tech stock. But anyway, that's where kind of the state of analysis is past versus present. But what is it in the future? In the future, yeah, I believe this overriding rule of overreaction will still be there. But I believe it may be more difficult to be an analyst because I already know the present is more difficult than it was in the past. And because it may become increasingly difficult to be a stock analyst in the future, I'm looking more towards vehicles like ETFs, algorithms that do the work for me. And so the exercise here, one of the exercises I would suggest at home is everyone watching today, you're a stock analyst probably of some sorts. You're either picking individual stocks, you're picking different ETFs, you have a strategy. And you already know you did some stuff in the past, you're doing some stuff in the present and in the future. But from an analysis standpoint, try to take a step back and think, how do you look at analysis? Has it changed for you? Do you analyze stocks a little differently? Has the game of analysis become a little bit more difficult over the years? I would love to hear, put in the comments below how you look at it. But that's how I'm looking at things right now, past, present, future, as PPC and dividend stock investor. And again, check out the pinned comment below. Check out Blossom. I would love to connect with you over there. Before I go today, in terms of a full disclosure, I own the stocks mentioned today. In terms of full disclosure, I am long Pfizer, ticker PFE. I'm long Chevron, CVX. I am also long PepsiCo, ticker PEP. I am long Google or Alphabet, ticker GOOGL. Also, I'm long the ETF SCHD. I am also long Treasuries. I am also long Blossom Social. In terms of full disclosure, I'm an affiliate of Blossom Social, so I'm compensated for signups over there, and I'll have my affiliate link in the pinned comment. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed investment advisor first. It's possible to lose money in the stock market. I'm not a licensed advisor. I'm just sharing my journey for fun and entertainment. It's possible to lose money in the stock market. I love you all. Thank you for watching. Thank you to the OGs for being here all these years on PPCE and dividend stock investing for everyone. I will see you in the next video.